Hi, welcome. My name is Gabriel. Welcome to my channel. What we're going to be doing on this channel is talking a lot about money, about finance, even more importantly, how to take care of the money that you have right now. I'm 30 years old and I own a life insurance agency here in San Antonio, Texas. So if you're from San Antonio, welcome. Today, we're going to be talking about something that's kind of important to me. There's this guy, and everybody knows who he is. His name's Dave Ramsey, and he's a financial coach. And so he helps people who are massively in debt or even just people who don't know how to run their own finance. He helps them. And let me tell you, I think that's awesome. First off, let me start there. I think that's awesome. And I know many people that he's helped become debt free, right? And so that's kind of his deal. But he had a take on life insurance. As a matter of fact, it's a very common take of his, and that is that he hates whole life insurance. Now, I am 30 years old and I own a life insurance agency here in San Antonio, Texas. And one of the main products that we carry is a whole life insurance product. Now, that whole life insurance most of the time is used for families so that when their loved one passes away, they have the funds available to cover the funeral expense. It's called final expense. And so Dave Ramsey has a take on it, and he hates it. He calls it the worst investment that you can possibly make. So somebody called into his video or into his whatever he has, and they talked about him. And I kind of want to talk about it because there's some things that, maybe he's ignorant to the fact, or maybe because it sounds better, or maybe because he gets a cut of the products that he sells on the term life side. I don't know. All of that could contribute. But I want you to know the real difference between term life insurance and whole life insurance. I think each product is important, but let's get into the video.
Just tuning into your show not too long ago, and you were speaking about life insurance and how whole life is absolute junk. Mm-hmm. I never understood how or why.
You hear that? Everybody knows that he thinks whole life insurance is complete garbage. So anyway,
that is necessary or true.
Okay.
I believed that whole life was better, and I started out seeking whole life, and so I ended up buying a policy for each of my 3 kids, and I have a universal policy for my mom. Mm-hmm. And the policies I have for my 3 kids, one is it's called a 10-pay, mm-hmm. where you pay it.
So let's stop right there. She basically wants to cover her whole family with a whole life insurance product. Let me tell you, that's not always the best way. The major difference between term life and whole life insurance is that term life is really geared towards a younger demographic, right? So if you're in your 20s, if you're in your 30s, if you're in your 40s, term life is basically a product that if something happened to you would cover your debt. Now let's just take me for example, okay? I still owe, $50,000 on my truck. I still owe, $30,000 or $40,000 on my wife's Jeep. My son is only 5. He has to go to college. My other little boy is only 2. He has to go to college. So I'm 30, right? I'm 30 years old. I have debt and I have future debt, meaning that there's going to be things in the future that are going to cost a lot of money. So I need a product, which most of the time is term life. I need a product to cover my debt in case something were to happen to me, right? And people die every day. I know everybody knows somebody. They were young and they're not with us anymore. It happens. This is reality. This is life. And so I need a product to cover that future debt and to cover my immediate debt. And that's why you buy whole life insurance. So let's see what he has to say.
For 10 years and it's paid up.
Yep.
And so I did that with my oldest daughter, and she has a policy. It's only $15,000 or $20,000 for her.
Yeah. It's a standard kid policy. Yeah. The reason you believe this is what you've been sold. Okay. But let's walk through it for a minute. Okay. There's 2 kinds of insurance, as you mentioned. There's cash value insurance and there's term insurance. All right. Term insurance on average runs about 1/20th the cost of whole life or cash value insurance.
So I'm going to stop him right there. One of his main things is that term life costs 1/20th of what whole life insurance costs. Let me tell you, That's not always the case. And here's really why this upsets me, his stance on this, is because life insurance is based on how old you are, right? So it's not like when I go to the car dealer and I want to buy a car, I go in there to negotiate. Like I want, if you tell me you can take this much off, I want you to take this much off. Maybe we meet in the middle. Maybe I win. Maybe you win. I don't know. But whenever I go to buy something of high value, we wanna negotiate. Let me ask you this: when you bought your house, did you and the realtor make a below ask offer? Well, it depends on what market you were in. Right now in San Antonio, you can't even find a house that doesn't. It's not in a bidding war, or the good houses anyway. But life insurance is totally different. These rates are fixed rates. I cannot give you a better deal, or I cannot discount my rates to meet your budget or something like that. Life insurance is based on how old you are. Now, why is that, Gabe? Well, because life insurance is based on risk, okay? That's why somebody who smokes pays more than somebody who doesn't smoke. That's why somebody who has recently had cancer, or recently had a stroke, or recently had a heart attack, is not going to get the same rate that somebody who's healthy and has not battled those things and doesn't take a lunchbox full case of medication, and they're going to get a better rate, and they're going to have different options. But when he says that all life insurance should be bought through term life, it's stupid. It's ridiculous, the notion that everybody qualifies for the same product. So keep that in mind.
In other words, you could have bought that same policy. Instead of spending $100, you'd buy it a month or whatever it was. Let's use 100 to be an example. Then you'd spend $5 a month. So what does the extra $95 that you're going to, what does it go to? Okay. Well, it goes to build up a savings account inside the policy called cash value. Does that sound familiar to you?
Yes.
And that's why you bought it, because you thought, hey, it builds up a cash value. That's awesome. All right. And here's the thing. The problem is not that. The problem is that the rules or the guidelines that what happens to the money in the savings account. On average, it's making about 1 to 1.5%. Horrible rate of return. Number one. Number two.
So I'm going to stop him right there. What he's talking about, when you buy a whole life insurance product, there is what's called your cash value. Now, this cash value accumulates at a very slow rate, and it's not like a big amount of interest that you're going to earn. When we sell this product, we don't really ever talk about it having cash value. Why? Because I hope that my client never gets in a position where they have to pull their cash value. It doesn't make any sense. And so, yes, he's right. This product does earn cash value. That means that if you pay $100 a month on your whole life insurance policy, a portion of that will get set aside every month into what's called your cash value account. It's kind of like a savings account. But let me tell you, probably 90% of policies in America, nobody touches their cash value. First off, if you were to pull your cash value, the company's going to expect you to pay it back. And why would you pay somebody else to borrow your own money? That doesn't make any sense. And so, like if you have an emergency, if something major comes up and you have to pull your cash value, by all means, it's your money. But as a selling point, nobody sells, well, at least my agents are taught, we don't sell whole life and use cash value as one of the selling points. Because it's a small interest rate that you earn on your money. Is it a benefit? Yeah, it's a benefit. It's gonna earn over the years, and before you know it, you might have $2,000 or $3,000 of cash value. But we instruct our clients, if you can, to the best of your ability, don't touch it.
So what would I do if I were in your shoes? Well, if the people need life insurance, let's get life insurance on them. Make sure the life insurance is there, and then I would close these policies. And now
let's stop right there. So that's one thing that kind of makes me upset. And he just kind of rushed through it, right? If the people who need life insurance, let's get them life insurance. Here's the deal. And I see it every day because this is my industry. This is what I do. You know, I've built this life insurance agency, and one important thing is that we want to get the best products that our clients qualify for. So when you have somebody that, like, let's just take diabetes for example. Do you have diabetes? Do you know somebody that has diabetes? Well, let me tell you, life insurance companies don't like to insure people who have diabetes on a term life insurance. As a matter of fact, most, and I'm going to say most companies, probably 95% of companies, if you used insulin before the age of 50, you don't even qualify for term life insurance. As soon as they see that come up on your medical information bureau, your policy is declined. Let's take if you've recently had cancer. Life insurance companies, they don't like to insure people on a term life product for somebody that's recently had cancer. Like that's they're not going to do it. Why would they? It's all based on risk, and the risk is different for everybody, especially in this market that we live in right now. Remember, people aren't dying from these things like they used to. My dad had a massive heart attack in 2009. It probably should have killed him because his valve was 97% clogged, all three of them. Well, guess what? He's alive today, and he feels like he's 25 again. Why? Because medical advancement is incredible. So keep that in mind.
If they're ill and can't get life insurance, then you're stuck. And, you know, they're stuck in the policy.
Did you hear that? If you're ill and you've had recent ailments, you're stuck in your policy. That's not true. There's time periods that go by where you can purchase, life insurance again. Sometimes you have to wait 3 years. Sometimes you have to wait 5 years. Sometimes you have to show that the medication you're taking is used for maintenance and it's going to help you continue. All of these things are taken into consideration by these big companies. Big companies like Transamerica, they're one of our favorite. Mutual of Omaha, they're one of our favorite. American Amicable, they're one of our favorite. Foresters Financial, they're one of our favorite. We write for all of these companies, and we know the guidelines of their underwriting. This guy, he doesn't, because that's not what he does. You know, one thing big in my life is that I always tell people, stay in your lane. Gabe, what do you mean by that? I mean, do what you're good at and talk about what you're good at. But if you don't know something, don't talk about it like you know, because you're going to end up hurting somebody else. Our biggest thing, and this is kind of a phrase here that we use in the agency, is that if we can't help our client, we're not going to hurt our client. And so, you know, this guy is telling this lady, go cancel all these policies. He doesn't even know what the situation of each policy is.
Because their health situation doesn't allow them to change because they've lost their health since they got the policy. But if they have a need for life insurance and can get life insurance, then buy the life.
Did you hear him? If they have a need for it and they can get it. Every situation is different. Let me tell you, if you're healthy, count your blessings. If you don't take a bunch of medication, count your blessings. If you're in your 50s or your 60s and you don't have high blood pressure and you don't take a cholesterol medication, count your blessings, because probably 80% of our clients, they're already taking those medications. Sure, if you're healthy and you can go buy this product and somebody's gonna sell you a $250,000 or a $300,000 policy and it's only gonna cost you $20 or $30 a month, great, that's a great option. But most of the time, that's not the case. And another thing is that you gotta remember, term life is only for a certain amount of years, meaning that after those years, if you haven't passed away, right? I'm 30 years old. I carry $1 million worth of coverage on me, and I just bought it last year. That policy is gonna take me to the age of 59 because I bought a 30-year term. If I'm not in the ground by the age of 59, every dollar that I put into that policy, it's gone. It was there. It's kind of like car insurance. It was there in case I died. But if I didn't, now I have to go reinsure. So that's another thing that he doesn't talk about. Term is only good for a certain Term. That's why it's called term.
Insurance to replace it, and then cancel this stuff and put your investments in something else that when you die, they don't keep your money. So you just don't want to go there. It's just a really, really bad.
Anyway, I completely disagree. This is something that I do. I'm really passionate about it because I can't tell you. Just the other day, right? Somebody that I insured when I just started in the business in 2013. It was two young boys and their dad. They wanted to insure their mom, and so when I met them, she was perfectly healthy. 6 years later, she just passed away last month. They come to my office and they just said, "Gabe, we just want to thank you because she left us a legacy. She left us inheritance to keep going. I'm going to be able to get through college. I'm going to be able to start this business that I wanted to start." And so let me tell you, death sucks. I understand that. Nobody wants to die. But it's important that you understand which life insurance product to purchase and why do you purchase it. If you come to me and you're a business owner, I'm going to tell you that you need to hedge your business, meaning that if something happened to you, you need to make sure, because now we're not just talking about you, we're talking about your employees, the people that work for you. A lot of people depend on you. We have a rather small agency. We have 5 other agents and a secretary that works in this office. And if something happened to me, I know for a fact that this agency would keep going and it wouldn't skip a beat. Nothing would stop just because I'm not here. Well, if you're a business owner, you need a policy like that in place. If you're a mom, especially a single mom, listen, if you're a single mom and you don't carry life insurance, and I'm not talking about the stuff that your job offers, okay? I mean the policy that has your name on it, that you're the owner of it, you pay for it every month. If you're a single mom or a single dad, you can't afford not to carry this coverage. So just keep that in mind. This guy, when it comes to life insurance, is a complete idiot because he thinks he knows what he's talking about and he has no idea. Now, I know that, he'll probably say that this is a scam, that this is a ripoff, that poor people are getting ripped off by whole life insurance. Let me tell you, every demographic buys whole life insurance products based on what they need it for. And every demographic buys term life insurance based on what they need it for and if they can qualify for it. So keep that in mind. I hope you enjoyed this video. If you can do me a huge favor, subscribe to this page. My name is Gabriel. I own a life insurance agency here in San Antonio, Texas, and we try to help people understand what they're buying and why they're buying it and what do they need it for. And so I hope you've enjoyed the channel up to this point. We're going to be working on more videos coming ahead. If there's anything that you want us to talk about, put it down below in the comments. Hit that like button if you can and subscribe to this